if you're just starting to invest for the first time, there's one important thing you need to be aware of, and that is the difference between buying individual stocks versus funds. All right. So, typically speaking, when we're talking about individual stocks, that means you are buying shares in specific companies like Amazon, Google, Microsoft, whatever it might be. You are essentially betting on that one company's performance in the hopes that they do well. Now, if you buy shares of a fund, you're still buying one stock ticker, right? It's still one symbol, but that fund often owns many companies underneath it. So if you look at something like a VOO, that is an S&P 500 index fund, meaning that even though you're just buying VOO, it in turn owns 500 of the largest companies in America. So you in turn own those as well. All right. So when would you do one or the other? Well, individual stocks have a much higher risk reward, right? You're betting on one company, it could go crazy and it could go to zero. Now, if you're buying a fund, you're not going to get the same crazy upside, right? Because you might own a whole bunch of different things underneath that, but you also are probably limiting your downside. So if you have a really strong conviction that a specific company is going to do well and you're willing to tolerate more risk, that's a decent time that you could think about buying individual shares in that company. If you want something that's a little bit more on autopilot, set and forget, something simple like a fund that auto balances over time will help you out. So remember that. Always think about your risk reward. If this was helpful, give a like and follow for more.